It's a very good summary. So I know we're running short on time here. So we talked about the insurance company acquisitions. There's a lot of other stuff we could talk about. We just don't have time to get into it today. Talk to me about your approach to finance, because, you got the insurance companies you guys have acquired. You ended up developing a passion in the Bitcoin space, started a private investment fund there. And then you've done a great job of managing money in the market, and trading options. And now you have a huge passion in the finance space, which you've always had. I mean, you studied finance in school, but you've done a great job with those as well. And that's an additional, almost completely different type of business model.
Very different business model. But at the end of the day, we're talking business, finance. We're all trying to accumulate cash flows. And there's a lot of ways to do that. You can buy a business, start a business, buy real estate, a lot of ways to generate cash flow, but you can also do it in the financial sector in different ways. One thing I learned in 2020 especially is that if you look at the actual inflation rate, I know a lot of us like to use CPI number. Like, what's the CPI? Is it 2.5 or is it 3? But if you look at the increase of the money supply, which is average around 10% a year in modern time, 7% if you go back historically, that number it's increasing. With traditional finance, the problem is getting an 8% return is phenomenal. I mean, like the S&P 500 is your go-to index for your risk rate of return. The ideal, you can't beat it. Like statistically, you cannot beat the S&P 500 unless you take on leverage or you start a business and put in your time and effort. As an investment, that's always been the gold standard, basically. The problem is the S&P 500 keeps up with the rate of inflation. It doesn't exceed it, the money supply itself. And most other investments are much lower than that. You look at bonds, you look at maybe some commercial real estate, certain things. If you're not leveraging to the hilt, you're not keeping up with even inflation.
And that means you're actually not preserving capital. And most people don't realize that. I think it's going to become more widely understood post 2020 because how rapidly the U.S. is devaluing the dollar. But historically, people haven't really fully understood that concept, and they don't understand fiat currency either, I don't think.
Exactly. 100%. Most people I talk to, when I say fiat currency, they're confused. They have no idea what I'm talking about. The money we have is not backed by anything at all, except for I said so. And that's what fiat means by declaration. So we're all playing this game of, okay, the money's worth something because, but there's nothing fundamentally behind it. And that's when I came around to Bitcoin. Bitcoin specifically is a hard asset. It's something that you can't create more of out of thin air. There's a protocol that dictates the number of Bitcoin that are available ever to be created. And so it's a hard asset, and it's a hard asset you can count on. And so I acquire Bitcoin as a treasury reserve. I've also started trading, a few years ago, I started trading stock options. So that's one way that you can generate cash flow on an investment based on Bitcoin derivatives being Bitcoin companies, and get a great return on your investment and generate cash along the way, which has been something I'm really fond of. It's been a great investment for me and for my investors too.